Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and I'll be your host for the next 25 minutes here on Options Guide TV. All right, so markets, I'm going to say mixed. I was going to start to say that they're down today, but once again, we have a situation where the markets were down overnight and now they are rebounding. So at this point in time, the S&P 500 index is up a smidge, and we're seeing that across the board on all the major indexes. So we're still in the heart of earnings season. The bulk of the mega cap tech stocks, that's for sure, all announced last week. Almost all of them announced on a Wednesday. A lot of the open wing butterflies that we did around those earnings events have done well. We're going to look at our trade that we put together on Dell Computing. Symbol is DELL, where we actually did something a little bit different, and we set up a time spread heading into their earnings report. So to start with, I want to look at that position, and then we're going to look at a position in AMD, Advanced Micro Devices. They're announcing on Wednesday after the close. Another earnings event that's going to happen before the next Option Guide TV on 11 a.m. Eastern Time on Wednesday is going to be Disney's earnings. And they had a real good box office hit this weekend on the sequel to Devil Wears Prada. And so it'll be an interesting event. I kind of feel like Disney is eventually starting to battle back a little bit now, and I kind of expect them to have a good earnings report on Wednesday. But at this point in time, I think I want to stick in the semiconductors, and the trade of the day is going to be in that underlying stock, AMD. So let's run to the Trader Pro software, and let's start by looking at the portfolio and looking at our trade in Dell. So if we look at Dell Computing, we did a diagonal spread in Dell. We notice over here, and probably most importantly, is that we have two different expiration dates. We have 11 days to expiration, that is on the May 15th expiration date, and then 25 days to expiration on the Dell 225 expiration, and this is the May 29th. 225 strike, May 29th expiration. All right, so this is another way to explain a diagonal spread is that it's a bull call spread, or otherwise known as a vertical spread, because when you look at a standard vertical debit spread using calls, if you were standing on the trading floor back in the day, you had to look vertically at the quote board to see the two quotes in order to make a market in it. When you adjust and use different strike prices, you would have to look diagonally on the board because one strike is lower than the other, and they were different expirations. So they called that a diagonal spread. Now, the biggest thing about this is you can't fall asleep if you put these trades on, because you have two different expiration dates, and auto exercise on assignment, just in general, becomes an issue if you just ride it all the way into that expiration date. So far, the trade is looking solid. We put it on. The 230 strike is not in play. Right now, the underlying stock is at 212 on Dell. So the stock is at 212. The 230 strike is not an issue, and the 225 strike is just coming along, and we're seeing implied volatility increase. So we're up a little bit on that. We're down a little bit on the 230 strike, which is fine as long as it doesn't reach 230 in the next 11 days. Ideally, this is almost the best scenario that you can have. Losing some money on the short-term option, just as long as it doesn't reach that strike, and then making money on the 225 option with the longer, I'll say it, the back month option. That's the best vernacular to use, the back month option. And you want implied volatility to keep creeping up. The midpoint now is $10.05. It started at $8.50. And as this expiration approaches, we're either going to sell another call option, or we might just close out the trade. So ideally, we'd like it to drift higher. So I'm going to run to the chart, and let's zoom in over on this corner. And you'll see that we've just slowly been moving forward. The 230 strike is all the way up here, so it would be a brand new recent high. And the stock is hanging out right about here, right at about 212. We'll call it 212. I guess it dropped off a little bit. 211. Okay. So that's where our trade is at. So we got another 11 days, and then unfortunately, this is a Friday expiration. So on Friday, we won't be doing a standard option guide TV. So we'll probably roll it or maybe even close it on the Wednesday before if things keep going the way that they're going. But I really like this trade in Dell. I think Dell has surprisingly been included in the AI stocks, and they've really positioned themselves to be a leader in that space. And so because of that, they've had a strong move up, but it still trades at a fairly decent PE. Let me just resume out of range. And this run up, we're still trading at a PE, a trailing PE of 22 and a forward PE of around 10. So it's getting credit for what it's doing in the AI space, the company is, but it's still not trading at that extremely high valuation. So I kind of expect a good earnings report out of them as we head in. We had this parabolic move up. Now we're kind of settling in, and I feel like the underlying is just waiting for earnings to happen. All right. Now let's go over to our options grid, and let's look at AMD. AMD right now is up $13, or it's down today, $13.57, heading into their earnings report Wednesday after the close. I think that this is an opportunity because of the kind of pullback in AMD, because AMD's chart looks a lot like Dell, actually. Pull it up. And, we don't have too many days in here where we got red candles. This was obviously a breakout right there. And you see that strong candle. Now we've gone up and we're kind of pulling back again. A little bit of a pullback. We're extended over the 200-day, 50-day, 20-day. And I think it's a good sign that we had a pullback today and heading into that earnings report. And because of that, I do want to get bullish. I want to get bullish on AMD. We're going to use our butterfly, our skip strike butterfly, or our open wing butterfly is what we're looking at doing today. One of my favorites around earnings on expensive stocks, $356. You get a lot of premium because of the actual value of the underlying. The higher the price, the more premium you get from that. And then you also toss in the implied volatility increase. And IV in this front month that we're looking to trade is at 103, where the back month is at 80, 73, and the standard is right around 67. So it's a fairly volatile stock anyways. Anybody can probably tell you that, just if you've ever watched AMD and the way that it's been trading. But with the known event, the implied volatility is now creeped up to 103. So this butterfly can be done at a fairly inexpensive cost because we get the opportunity to sell two of these out of the money option contracts, the 365 strike, and bring in some premium there. So we are 15 points wide, and then we're going to go 7.5 points, half of that 15. We're going to buy the $372.50 strike. Throw that one in. And the expiration we're using is this Friday. So they announce on Tuesday. You have all day Wednesday, all day Thursday, all day Friday to put the trade on. We got one too many in here. And we're getting this done for $3.38. The max upside, the max that the butterfly can trade for is $15. If we go above the highest strike, if it blows earnings away and we get more than a one standard deviation move, or the expected move, I should say, the expected move is going to be right about here, actually. If we get more than that, then this thing will trade, this butterfly has to trade for about $7.50, which is the difference from the long spread from 350 to 365, minus the short spread, which is 7.5 points from 365 to 372.50. That means that anywhere above this strike, it has to trade for $7.50 minus whatever net debit we paid. Okay, let's keep it at 335. And let's send that to the what if calculator and take a peek at it. All right, let me pull this down. Here's the underlying stock, 346.48. At 350 is when our long butterfly kicks in. So we need a little bit of a bump, not that big of a move to get to our first strike. From 350 to 365, we're in the sweet spot. If we can land anywhere near the 365 level, that is the peak to the wings of our butterfly. These are the two option contracts that we sold. Now we need to pay for those option contracts. So we cut that in half. We cut the short spread in half to help pay for it. Now that adds a little bit of cost up front. Just not a ton, not as much as you might expect, but we have a shorter short spread on the width between the strikes than the long spread. And because of that, that opens up this wing and allows us to be profitable anywhere above the 372.50 strike. So 335. So if we do get up to here by that expiration, by that Friday, we're looking to make at expiration $407.50. $407.50 in all this trade. So I don't know exactly what it pulled in. The price we're going to say is 335, and that's where I would work the order if I put it in. And so you would be, if you filled it at 335, grab my little handy dandy calculator, 750 minus 335, we're looking at $4.15. And this is saying 408. Well, it's close. I don't know exactly what it grabbed, but it didn't grab the 335 when we first put it in. And then on the way down, now, if you're wrong, there's really not a lot of help. You just would, if the market opened down in this range, you notice here the green line is the profit and loss calculator right now. So if the market actually went down in this situation, we would then want to get out fairly quick. If you feel the momentum going to the downside, because eventually what's going to happen is this green line, as that Friday expiration approaches, is going to morph into the yellow line at expiration. So every day that goes by, it's going to start morphing. And we can show you this with this calculator. So this is Monday. We'll go to Wednesday, and it starts to move. Then we'll take it. It's Wednesday at 11 a.m. Then we're going to go to Thursday. It's really not going to move a lot, because implied volatility is still extremely high until we get to Friday. And then on Friday, now you can kind of see the movement. Now, implied volatility is going to come in, so that would go quicker this direction, and this would start morphing down towards the actual profit and loss, maximum profit and loss at the end of that expiration date. And yeah, we're going to get bullish on AMD heading into their earnings. It's the fact that it is a $300 stock and the fact that we have a high implied volatility, all of these things make the setup of an open wing butterfly very interesting. Now, and I say that as opposed to a $50 stock, you still have implied volatility. It's still very feasible to do, but you don't get the advantage of a pumped up premium like you do on a little bit higher dollar stock. Now, you could do a couple of them, and that could add to the scenario. But I like when the stock is trading right around right in this range between 300 all the way even up to 1,000. But on $1,000 stocks, sometimes you get a little bit wider bid-ask spreads than you would like. So I like this range for this stock in this scenario, and the sell-off today makes this an interesting trade heading into earnings. Now, if you have any questions, please do put them in the chat box. And also, if you're interested in Tradier and the Tradier platform and learning and even using the paper trading application right along, there is a link down below that you can click to explore more about the option trading. And we focus on our Fundamental Friday show that's going to be coming up this Friday. And we've already got 3 sessions in the book talking about the very basics of option contracts. So if you'd like to learn more about the vernacular of options and some of the more basic trades, feel free, as opposed to the advanced trades like a open wing butterfly. We're adding that segment into Options Guy TV. All right, so that is our AMD trade. So let's go back and look at the options grid, and I'll give you one last overview of it. So AMD right now is trading at $346.81. We're going to look to do the May 8th expiration, which is 4 days away. Tradier is going to be announcing after the close on Tuesday this week, with the stock trading right around the most at the money strike is the $347.50 strike. We're going to actually just go a little bit up, and we're going to buy the 350 strike call, sell 2 of the 365 strike calls, and buy 1 of the $372.50 strike calls, $372.50. And then that allows us to be profitable everywhere from, well, we're looking to pay about $3.35 for it, or $335 per 1x2x1 butterfly. So the break even would be $350 plus $3.35, or $353.35. Anywhere above that will be profitable on this trade, all the way up to the 380 and beyond mark. Anywhere above the 372.50 strike in this butterfly, we are profitable. And with the high implied volatility, the higher price stock, this makes it a very inexpensive way to trade AMD and be bullish around their earnings report. Okay, next trade that we want to look at, we have the Dell position on. If anybody has questions, go ahead and put them in the chat box. But I don't think I want to lean into the Disney trade on Wednesday morning. I do feel like it's a little bit. Let's put it this way: if I was going to look at Disney, I think I would do a short put spread, and I like Disney right now, right here. It definitely hasn't. It's been a struggling stock, and here's the most recent low. And then we bounce back a little bit. We got a little bit of support right in that range. So if I were to look at Disney, and I'm not going to make this an official paper trade. Oh, by the way, I need to send this to the trading floor. So here goes the trade. Boom goes the dynamite. And that trade has been sent to the paper trading floor. And I'll make sure that gets executed before the next show on Wednesday so that we can review it. But now in Disney, we're at 102.50. If I were, because I don't think I mind, let's run back to the chart. Disney, I don't think I mind buying 100 shares of Disney down around this level. Very high low, right? So if we got pushed down to the bottom end of this channel, and this is a interesting, not quite. I don't know if I would mind buying Disney right in this range. And if I did anything, my trade would be to go out a little bit further in time, probably 32 days, and sell a put spread. So we have the 102 call, and I'm going to sell something very close to where the underlying is at and try to bring in as much premium as we can. So we're going to sell the 102. Let's clear this out. We're going to sell the 102, and we're going to go probably 4 points here and buy the 138. So what? Yeah, not bad. So we're pulling in $1.68 on a 4-point wide trade heading into earnings. 168 divided by 4. We're looking at 42% of the width of the strikes. That's not a bad trade. If you're interested in Disney and you think that they will go up after their earnings, that they'll have a decent report and will drive the stock higher, I don't mind this short put spread. So this is selling at the money put and then buying a little bit out of the money put. I'll send this to the paper trading floor. Let's do it. 168. I think I would try to get 170 if I was in the real marketplace, especially into earnings, because these are very liquid options. I would think that you could fill fairly close to the midpoint. So we're going to send it at a 170 net credit to the floor, and boom goes the dynamite. The trade has been sent to the floor. So we have 2 paper trades out there. I like the AMD trade better. Disney, this is just an alternative trade. If you want to get bullish on Disney, I like the risk reward of being able to go out 4 points wide and get 40% of the width of the spread. It's almost a 50-50 trade, but we're out of the money on Disney. So I like it. I like the way that it's set up. All right. I don't see any questions in the chat box. Then that's going to be it for this edition of Options Guy TV. We'll be back on Wednesday. We'll review both of these trades and we will get set up for Fundamental Friday. If you'd like to learn more, please do look in the description below, and we'll see you this Wednesday at 11 a.m. Eastern Time, hub.tradier.com. Easiest place to find Options Guy TV. Hope to see you then.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.